Okay, let's talk about a metal you probably have somewhere in your house: silver. But we're not talking about grandma's silverware here. We're going to dive into how this incredibly familiar metal has quietly become one of the most critical, fought over resources on the planet, sparking a full-blown global crisis. To get a sense of just how wild things got, just listen to this. This is a scene from late 2025 that sounds more like something out of a spy movie than a commodities report. You see, silver is dense, it's heavy. You almost never fly it because it's just way too expensive. The fact that traders were so desperate they were chartering planes to haul it across the ocean, well, that's a massive red flag that the physical market was completely breaking down. And this number tells you everything you need to know. 39%. That was the emergency interest rate you had to pay just to borrow physical silver in London. Think about that for a second. That's an interest rate you'd expect on a high-risk credit card, not a major global commodity. This was the market screaming for help, a true five-alarm fire signaling absolute desperation for the actual metal. So how on earth did we get here? How did a metal we use for jewelry cause this much chaos? Well, in this explainer, we're going to break it all down. It's a story that involves a massive supply deficit, a calculated geopolitical power play, and, believe it or not, the entire future of our green economy. All right, so first, let's look at the evidence. This crisis didn't just pop up out of nowhere. It's been a slow-motion train wreck building for 5 straight years, as the world consistently used way more silver than it could possibly produce. And these numbers, wow, they really paint a picture of the panic. The COMEX in New York and the LBMA in London. These are the two most important vaults for physical silver on the entire planet. And as you can see, their stockpiles have been absolutely ransacked. The actual physical metal that you can get your hands on, it's just been disappearing at an incredible rate. So, the big question is, why? Why are the vaults emptying out? Well, it all comes down to this fundamental, almost unsolvable mismatch between how we get silver out of the ground and how we're now using it. This isn't just a temporary hiccup, it's a deep structural flaw in the entire market. And here it is. This is the absolute heart of the problem. You see, unlike something like oil, where you can just drill more wells if the price goes up, silver's supply is what economists call inelastic. You can't just flip a switch and make more. There is no accelerator pedal for silver, and the reason why is really fascinating. This chart shows you everything. A whopping 75%, 3/4, of all the silver mined in the world is just a byproduct. It comes out of the ground when miners are actually looking for lead, zinc, and copper. So it doesn't matter if the price of silver goes to the moon. A mining company isn't going to spend billions of dollars to build a new copper mine just for the tiny little bit of silver that comes along for the ride. The supply is basically handcuffed to the demand for other metals. So while supply is stuck in first gear, demand just slammed its foot on the gas. And it's being driven by 3 of the biggest technological revolutions of our lifetime. You've got solar power, electric vehicles, and the massive build-out of AI data centers, all competing, all fighting for the exact same finite pool of silver. It's a perfect storm of demand. And let's just talk about the scale here for a minute, because the numbers are truly mind-boggling. The global push for solar energy is the single biggest engine of this demand crisis. Projections are showing that at the pace we're going, the solar industry alone could chew through almost all, 98%, of the world's known silver reserves by 2050. And then you've got electric vehicles. Your standard gas-powered car has a tiny bit of silver, maybe 15 to 28 grams, in its electronics. But an EV, it is drenched in silver. It's in the batteries, the sensors, the high-voltage connectors, everywhere. We're talking about a jump from a handful of grams to potentially a full kilogram of silver per car. That's not a small bump. That's a quantum leap in consumption. Okay, so you've got a physical market that is cracking under the strain of this massive deficit. And this is where the story pivots from pure market economics to a high-stakes game of geopolitical chess. Nations are suddenly waking up and treating silver not as a commodity, but as a critical national security asset. And the first big piece to move on that chessboard was China. As the world's top silver refiner, China used to just let the market do its thing. But that all changed. Beijing made a hard pivot to a policy they call resource sovereignty, which is a fancy way of saying, we're keeping our silver for ourselves to fuel our own green energy and tech industries. And this wasn't some slow, gradual shift. Look at this timeline.
It was a blitz. In just a few months, they systematically shut down the exits. They cut tax rebates, cracked down on any unofficial gray market shipments, and then slammed the doors shut with a strict new licensing system. In the blink of an eye, Beijing effectively nationalized a huge chunk of the world's refined silver supply.
Well, that move by China forced America's hand. In late 2025, the U.S. made its countermove and officially added silver to its list of critical minerals. This puts it in the same strategic category as things like lithium and rare earths. It's the government formally admitting, our supply chain is incredibly vulnerable here.
Now, this designation isn't just for show. It unlocks a whole new toolbox. It means federal money can start flowing to domestic mining projects. It means the painfully slow permitting process can get fast-tracked. And it gives the U.S. the legal firepower to use tariffs to protect its own supply chain if it has to. But, and this is a really huge but, there's a massive problem. All of these solutions are for the long term. You can't just snap your fingers and create a new mine. It takes 7 to 10 years, best case scenario. So while these are great ideas for 2035, they do absolutely nothing to solve the immediate, desperate shortage the world is facing right now. So let's put it all together. What happens when you combine a massive physical deficit, an explosion in demand, and a geopolitical food fight over what's left? Well, the price of silver completely detached from its old reality.
After starting 2025 at a pretty normal price of around $29 an ounce, silver went on an absolute tear. The price just exploded, surging over 120% to hit highs of over $80. This was the moment the market finally woke up and realized the shelves were bare. And this isn't just a bunch of Reddit traders speculating. Look at these updated price targets for 2026 from some of the biggest banks in the world. The consensus on Wall Street is crystal clear. The era of cheap $30 silver is over, period. They're all pointing dramatically higher, with some of the most respected analysts calling for triple-digit silver. Of course, nothing goes up in a straight line forever. There are some wild cards out there. If there's a huge technological breakthrough with the industry calls thrifting that allows solar panels to use less silver, that could ease demand. A really sharp global recession would also slow things down. But on the flip side, things like a weaker dollar or more global conflict could send investors scrambling back into silver as a safe haven, pushing prices even higher. But even with those wild cards in play, the fundamental story doesn't change. The core takeaway from nearly every serious analyst is this: the deep chasm between what the world needs and what it can produce, that's not a temporary glitch. It is now a permanent feature of the silver market. And all of this leaves us with one final pretty provocative thought. Our entire global transition to green energy, every solar panel, every electric car, is literally being built with silver. We've entered a new era where a metal we once made coins out of is now a strategic weapon. And the question is no longer if a shortage will bite, but what happens when it does.